Right. In the first learning outcome, basically, if I just need to bring that over, in the first learning outcome, we basically discuss things which were looking at basically understanding the role of human resources and what is the ongoing issues or contemporary issues that they, look at when we look at the role of HR within an organization. Now, some of the things that we discussed were things related directly to their roles and responsibilities in terms of what functions does the HR play, how does it help in, strategic decision making. And one of the key things that we looked at was that, how HR gets involved in delivering an overall strategy for the organization. So which comes out from the mission and vision of the company, but when that is broken down into specifically strategy for human resources, how does HR look at that as a function, and then creates something which is called an HR strategy. Now, we looked at various cogs in that strategies that sometimes when they sit down and look at making a 3-year, 5-year plan or a 10-year plan for human resources in the organization, they are affected by internal and external factors within the environment. These could be competitors, this could be the legislation, this could be the government regulation. In some cases, if the business is operating in different geographies, they are also looking at their competitors and also, in general about the market situation which could affect their business. And that all kind of, then looks at influencing how HR creates a human resources strategy. We briefly looked at understanding of one of the important frameworks, which was called the 4 Ps of change. And this is what most HR managers use when they look at, doing or basically looking at bringing change into the organization. So here we looked at the reasons of why change is to be introduced, the purpose, what is the bigger picture when the change is going to be introduced, how will it affect the organization in general, and then what is the plan to bring that change, and then once the change has been brought across midway through or in part the change started to happen, how do they look at reviewing that whether this new structure, new culture, new policies and procedures which they are introducing, it could be training and development, is it making that impact or giving that makeover which is required within the organization. Then we also looked at sometimes when we look at quality and when we look at studying continuous improvement which is done within the organization. If you work on certain things like an example that I would take here is that if you have employees who come late into the office, time management is an issue. So sometimes HR managers would then identify this as a small issue, but because it is related to the code of the ethics and the code of working within the organization, they will put some sort of a plan in place to ensure that the person or the employee or the staff is actually coming on time. And when we look at that as a process, which is a gradual process which brings across change, we looked at 1 or 2 models which are relevant to HR as well. They were initially part of when the research was done, they were initially part of the quality change or continuous CQI as we call it, continuous quality improvement programs, which a lot of companies implement. So we looked at Levin's model, which is a 3-step model, talks about unfreezing, change being introduced, and then refreezing, so that once the change has been introduced, everybody transforms to that new phase of working, and understands the way in terms of how the working is to be done. We also looked at briefly mentioning Cotter's 8-step change model, and I put in some backup slides which basically talk about another physicist who basically did a lot of research into how change is introduced into organizations, and he identified 8 different steps or phases through which the organization, employees, staff, can go through to introduce that change. So when change is introduced, you have to understand why the change is required. If you introduce certain steps to be able to bring that change, how these would then enable the employees to either become more productive, more efficient, or help them in achieving their goals, or help them perform better in their roles and responsibilities. So one of the things that we looked at was the Clover 5-stage model, which talks about that when change is introduced, you have employees by default, in a denial phase. they do not accept change. Some of the employees in the organization, staff, they are not willing to accept change. So there's a denial phase, and he came across with this model wherein he said that change is a gradual process, and there is a curve which he came across, and obviously he suggested that change as a process is actually a curve, and there are 5 stages to this process before actually change is acceptable within the organization. So some employees start with denial phase, but at some stage they go into anger, saying that, okay, why do I need to change? And, how is it going to affect me? How is it going to make my work easier? Some people who do not accept, they go into a depression phase and they need further training, development, counseling. But at some stage when employees start to accept change, start to bargain in terms of, if I make this change, or if I do this, or if I achieve this, will I get more incentive, will I get higher perks, or will I get more bonus, or my salary? So they're in that stage of bargaining, and then come to the stage of acceptance. And in the last part of the first learning outcome, we looked at that how HR managers are actually continuously under pressure to some increase or to basically bring across this change in the organization. And sometimes you will see that if something new is introduced into the company, business, organization, HR is given the responsibility to kind of bring that transition or that change or kind of, sow the seeds of change, in a particular department or in a particular function. And that puts a lot of pressure on the HR team to be able to kind of create a plan which will then be acceptable by most employees. And that plan of acceptance puts them under pressure. So in those cases, HR managers will need to have, they kind of fall back on certain ethics and principles which are defined, and that is the code which helps them to get through that phase of, bringing across that change, speaking to people about it, convincing them to, come along and play their role, and then finally look at implementing it. Now, when we talk about, ethics codes, we talk about things which are defined within the organization as things like, your employee handbook, for example, certain directives which are given. So the HR manager has a mandate, for example, from the CEO of the organization or the head of the organization to say that this is something which is crucial and needs to be done or accomplished because the organization needs to move forward. And some of the decisions which HR has to take, things like redundancies, things like pay cuts, when they have to deal with issues like this, they have to kind of fall back onto professional code of conduct, which is defined within the organization as an HR practice, and that is where they use these ethics and the principles to be able to negotiate and bring across that process of change. Now, because the HR is dealing with continuously issues which are related to manpower, staff, employees, whichever way you call it, they then look at kind of looking at dividing it into different sections. So there are issues which are classified as ethical issues in HR, and these ethical issues could be classified into 8 different types. And that is where the role of human resources management becomes very important within the organization. So it starts off with the job specification. When the employees are recruited and selected within the organization, they look at job spec. It has to be detailed enough, specific enough to be able to help achieve an organizational objective. And that's what kind of was summarized. That then when they look at fallbacks, they look at reviews. How would you start the review? You would look at picking up the job description and say, okay, you're not actually achieving this, or you're not actually accomplishing this, or you're not actually doing this, which is given in your job description. And that then becomes the base point from which the HR starts review. Sometimes it is related to some of the other issues which are listed on this slide, and those is what we covered. From a point of view of understanding contemporary issues or issues which are ongoing within the organization from an HR perspective. They're always dealing with performance appraisals. They're always dealing with compensation. They're dealing with issues which are related to discrimination, health and safety. And in some cases, when you look at established businesses and organizations, they're dealing with things like restructuring, looking at layoffs, redundancies. Obviously compensation plans to look at bringing in new people, training and development, and finally, looking at rewriting sometimes job responsibilities and, job descriptions, which are then more apt and, more in tune with what the organization's requirements are. So here, earlier we had taken an example of BT, British Telecom, which is laying off 13,000 workers, and it is a very difficult role or a job for an HR person working in the HR to look at dealing with redundancies at that large level. And he or she has to look at making the right decisions, and those decisions are based on the overall HR strategy which has been agreed in terms of restructuring the organization between the CEO and the Chief HR Officer. So those are things when they need to look at falling back on the tools and techniques that they need to effectively deliver this strategy. They have to kind of fall back onto things like the code of conduct, the ethical principles, or the ethics, which are defining the ethos of the organization. And that is where the explanation and discussions with employees actually starts. Now, going forward into learning outcome 2, once we've understood the the ongoing issues and what the human resources managers actually deal with on a day-to-day basis, what we are going to look at now would be to understand in a bit more detail of how the models, basically what is the core role which the HR actually plays within the organization. So we need to be able to now look at some of the functions in a bit more detail, and the detail that we are going to look at in particular would be to look at how does the delivery, implementation of a strategy happens within the organization. And that is what we will understand when we look at, the key essence of how and what you do on a daily basis when you work within a human resources department or as a human resources manager in a company. The other thing that we will study in the learning outcome 2 would be to understand the methods of evaluation. How does an HR person evaluate the performance of an employee, vis-a-vis the job description, vis-a-vis the roles and responsibilities which are given. You cannot just have an open sheet through which you go and do an evaluation, because you have to start from somewhere. And what we will look at is some of the key functions of and the key frameworks which have over the years been defined, and they have basically become the tools using which HR will do these reviews or will look at evaluating your job responsibility. So there are things that we need to look at, which will be things like the balance scorecard. We will look at certain.
I think it's blank here. I'm not seeing anything on your slide.
Give me 1 second.
Okay.
Let me just reshare and then start again. In your case, Adinka, because you had already joined, I did get a knock from you to join. So if you're not able to see this,
will I exit then join again?
Is it better now? Are you able to see it?
I'm just saying learning outcome 2, goals of effective human resource management.
Yeah, that is what we're going to discuss today. So up until now, I was basically just recapping what we've covered in learning outcome 1 in the first session. And we are going to start with this one. So sometimes if the screen does not refresh, just do a quick refresh button on your side, and you should be able to see the slide. But thanks for letting me know, so that I've kind of shared and unshared the screen, which then allows you to see the slide. So in this learning outcome, as I was mentioning, we're going to look at some of the key things in terms of tools, how HR managers look at doing an evaluation within the company or within a department. So there are things that we will talk about, which will be things like an audit. What is an HR audit? How does HR department come in and do an audit? We have heard about a term called financial audit, but we'll discuss about this. And there is something which is synonymous to something called a financial audit, which is called an HR audit. Sometimes there are benchmarking techniques which the HR department uses to benchmark the performance of one employee against the other, one department against the other. So those are things that we will also discuss. And last but not the least, we are going to get into understanding, the key functions of HR, which they look at on a day-to-day basis. And we have discussed this very briefly in terms of just naming them so far. But we will go into detail of each of the functions to cover the learning outcome 2. And for which, what I've done is I've extracted something which is a good, handout, and this will be specifically useful for doing the tasks, but also good for you to read through. It's about, I think, 20 odd pages, but that will actually help you to understand this learning outcome 2 in totality. So this is something that I'm going to use, while I'm talking, in terms of, covering the learning outcome 2, and some of the examples and some of the text that I've taken has actually been used, has actually been created using this particular extract from a book, a very renowned HR author, which has actually written a lot of books, and his name is Kogan. I'll bring that out in a second, and that is something that we will also look at, going through for the purposes of doing some additional reading. So the author's name is Kogan, and he's a HR specialist, considered as a specialist in terms of an HR person, and this extract is primarily from his book. So let's look at dwelling a bit deeper into what does the learning outcome 2 mean. Now, let's look at the role of HR in terms of where they come in terms of an independent department within the organization. So sometimes when you look at, the role of HR, there are a few terms which you kind of hear about, which is things like, the HR needs to show leadership. In some cases, you will hear terms like sometimes that the chief of the organization or somebody in the organization would say that we are having these problems, but there's no leadership coming in from HR. There's no person coming forward to be able to solve these problems for employees, and that is where the term basically comes out, that the HR side of things will kind of unravel what all HR actually does. So we start with something called the leadership, and when we look at the leadership relies on something called the HRIS. HRIS essentially stands for Human Resources Information System. Now, all organizations, when we look at, they have a lot of employees, and they have lots of data, which is personal data of employees, data which is generated from reviews, appraisals. There is a system in most companies which at some point in time they have, and that system basically is an information system to store all the data related to human resources. Now, what could be that data? That data could be data related to personal records of the employee. It could be employment contracts. It could be your things related to your compensation and benefits, things like payroll. It could be data related to your reviews, which have happened over the years or over the months. It could have things like your job description, and it also will have things which are related to in terms of personalized data, things like your qualification, your passport, and other details which the organization needs to have on hand to be able to have a file or have a kind of a portfolio which basically says you're an employee or you're working within the organization as an employee, as a contractor, as a supplier, or as a customer, whatever it is. So when we look at the leadership actually dipping into to make decisions, they have some sort of a system within the organization, and that system, if I have to give it a name, would be a system called the Human Resources Information System. Now, small organizations, small businesses might not have, an electronic or a system like an ERP, an enterprise resource planning package, or a specific HR system, but they might do all this, archiving of data primarily in terms of employee files. But that file or that system essentially allows the top man in HR to get access to all the data of an employee or employees working within a department at a click of a button or through the access of a file or some documents. The other side of things that we get to see sometimes is that if you have a big enough organization, you will see that sometimes you will have different components or different sub-departments of HR within the organization. So the department might be called the Human Resources Department, but because the functions are large enough, functions like training and development, functions like payroll and compensation and benefits, and in some cases functions which are related directly to managing partners or employees working as consultants within the organization might be large enough that these will be separate functional departments or divisions within the organization. So here we will look at that as a specialist function if we have to look at drawing up contracts, or if we have to draw up, job descriptions, and if it's a large enough organization, say for example, we look at Google or Facebook, which have thousands and thousands of employees, all of them work in programming or coding. Here in this case, some of them would, be required to be managed on a weekly, daily, monthly basis. And what you will see is that the HR department is split up into something called HR shared services, HR centers of expertise, and to a certain extent, HR business partners. Now, the business partner side of the department would be looking at things into, working as a small team, but they manage a set of, recruitment agents or recruitment agencies which actually would provide coders and programmers to the organization. So Facebook might not take a decision to directly employ them, but as a subcontractor, ask them to be employed through an agency. And in those cases, you would see the business side of services or the contracts and the payroll and other things are outsourced under the heading of something called business partner services. So here you will see specialized people working for the company, but not on the payroll or not on their role, but working through an agency or a partner, and that will manage all the documentation, contracts, compensation, benefits, and all those things for the for that particular number of employees delivering a particular a project or working on a project. The shared services side of things could be wherein sometimes you will see the HR plays a role within the organization which is seen as a support role, and sometimes you will see in organizations wherein HR plays a major role or a frontline role within the services which the organization provides. So the example in this case would be if I look at PwC, PricewaterhouseCoopers, we look at Ernst & Young, the big four, accounting firms. So we look at, Deloitte, and we look at KPMG. Now these four firms actually look at providing shared HR services. So over the years, what these firms have done is they have well-established processes, policies, and procedures in place, and they are able to take over outsourcing of HR, for a number of small, medium, large businesses, wherein they provide these services to the company, but it is provided as a white label branding. So what they do is they will come in and work within the department. Their consultants would come in and work within the company, but maybe one person would be managing the working of all these consultants who are providing the services on behalf of the company to their clients or customers. So here the function is seen as a function which is under a shared service, because it is not actually owned by the company or on the rolls of the company, but maybe a few set of people are managing, and they've outsourced that part of the services which the company provides, and that HR side of functions would be classified as support services or administrative services, and we could club that under something called shared services. A better example, if I have to give you, would be that if you look at small businesses and small and medium businesses, what you will see sometimes is they do not have the enough bandwidth or resources to employ somebody as a human resources manager or have a full-fledged department within the organization. So here, what they will tend to do is they will work with some of the big accounting firms who manage accounting and HR services for them, but it will be in the form of an outsourced service, and that service which is only providing supportive function or only fulfilling the administrative duties in terms of drawing up the payroll or looking at things like monthly reviews or newsletters and things like that would fall into something called administrative services or shared services. The third side that we could look at, extending this on also a bit further, would be things like, say, training and development. Now, you would see that a lot of large companies have their own training and development divisions within the company. But in most cases, you will see again some businesses prefer to outsource this whole function of training and development, T&D as we call it, to a third-party organization. And the reason why they do that is because they get to see these specialized services being offered in a much more effective manner, rather than having the internal departments produce that training material and then do those, delivery for their staff and employee. So sometimes they find it much more cost effective. Sometimes they find it much more productive to kind of outsource this function, which could be training and development for the employees. And that could be then seen as something called because the outsourcing is happening on an expert topic or an area, and that is where you get to see that this is classified as something called the centers of expertise. There could be a lot many on that side, but training and development is one example which I've given. Recruitment could be another function. Sometimes you will see that a lot of large organizations like GE, or for example, a lot of the large organizations in the UK that we look at, they have something called a recruiter. And that recruiter is basically an agency person sitting within the company premises, and that recruiter basically looks at headhunting or looking at the process of recruitment and selection. But that person's responsibility, because he's an expert in recruitment, his main responsibility lies in the fact that he needs to be able to identify and shortlist CVs which are then provided at some stage to the organization internally for recruiting people. So in this case, they do not want to have somebody within the HR department who is looking at continuously recruiting, but what they do is they do an arrangement with an agency, a recruitment agency, and have one of their colleagues sit within the company premises as a recruiter and doing the initial job of scrutinizing, shortlisting, placing the adverts and things like that. And that would also be classified as something called HR Center of Expertise. Now here, when we go into a bit more detail, what we do get to see is that if I look at this chart, which is an image that I've drawn, and if I kind of then look at the core functions of HR which they deal with, or ongoing issues they deal with, things like recruiting or resourcing. We look at things like administration, look at pay and benefits, you look at employee relations, you look at training and development, and then some of the activities which are long-term, strategic activities. If we have to classify them and then look at these three areas in particular, when we talk about these three areas, how would we classify them into HR partner services, shared services, and then also into expert services? So if I have to look at training and development, I can put this into something called, expert services, because sometimes organizations would prefer to outsource that and go to a special organization because they have the modules, they have the whole material, and they can deliver this far better than what can be managed within the organization. Sometimes when I look at strategic activity, I can go and outsource that to the Big Four, the PwC and Ernst & Young, because they have processes, policies, and the best practices that they have implemented over the years, and they then can be outsourced to on that side and classified in HR business partner services. When we look at an organization which has lots of employees, what we are trying to look at is and a lot of contractors, a lot of turnover in terms of employees. That means employees coming, working, and then finishing their contract and going. Sometimes you will see that the pay and benefits could be something which are then managed by the shared services within an organization, and that tends to work better if they look at that side of things, wherein they outsource it to an agency because they have a lot of turnover. Now, this could be an example when you look at a construction company. They have lots of workers which work as construction workers, but at some stage when the initial part of the construction work is over and it moves to the second phase, wherein they are looking at internal kind of decoration and finishing, you will see that the number of workers are then reducing because it requires specialist works to be able to do things like doing the fittings and other things. So here, shared services would be looking at things like pay and benefits, looking at number of employees working at any given point in time on a shift, and those services then could be classified under the shared services. Is that okay so far?
Yeah.
Okay. Now, if I have to then look at, sometimes let's also understand, you will see that the role of HR in different organizations is different. You do not find, you will find 50-60% of the HR role within all organizations to be the same. They look at basic functions like recruitment, selection, training, development, employee relations, performance appraisal, and they look at issues of legislation. But some of these functions in some organizations might be taking more prominence. like if you look at a business like recruitment agency, their core business is recruitment. So one of the key functions out of the 5 or 6 that we've discussed, their main function on which 70–80% of the resources would be utilized or would be kind of directed would be the process of recruitment, because that is where they make money. But if I look at a different side of organization, which is like Facebook, there 80% of the resources which are working within the organization are primarily programmers, coders, or who work within engineering. So here, functions like marketing, functions like sales, production might be very small, because their main aim of the business is to produce a piece of software which then enables more interactions or networking amongst customers. So depending on the size, type of the organization, sometimes you will see that some of these activities and roles of HR within an organization tend to differ and take more importance than the other roles, because of the culture and structure of the products and services which the organization actually brings out or primarily sells. Now, one of the key things that we look at, and this is something which I think if I talk about, is that what we are trying to look at here is a 3-string strategy of looking at centers of expertise, business partner, shared services. Now, this particular thing also relates to something which is a very important conceptual framework in the HR, which is called the Ulrich three-legged model, stool model. Now, these 3 services talk about centers of expertise, business partners, and shared services. So this key concept was actually introduced by the person who's done a research in this area, and he classified that some of these services within what HR does on a day-to-day basis or on a weekly, monthly, yearly basis are classified into these 3 types. And this particular model is important to understand, because this is a theoretical model, and this is utilized when you get into this role, or if you do get into an HR role, you will always classify these services which this department provides into 3 different types. One could be specialized services that you have to keep within the organization. You can't do away with it. Sometimes some organizations outsource it because it is considered a very, very specialist area in which you cannot make mistakes, and you have to rely on external organizations to be able to provide that. Sometimes some of these services are dependent on something called your business partners, because there is a joint delivery, and in order to bring effectiveness, they can only be delivered by working together very closely with your partners and suppliers. And the third side of services would be shared services, which basically are transactional services. And sometimes we do see that organizations outsource these services, like payroll. Is a service which every organization has, whether it's small, medium, large. You have to generate a payslip, you have to generate a payroll at the end of the month. And these services now are seen as what we call the low-hanging fruit within the HR specialized set of services, because these are services which have been automated using the use of information systems over the years within an organization. So maybe the HR manager, once the contract, the pays, the compensation, the benefits are defined in the system, at the end of the month, the HR manager or somebody who's looking after the generation of payroll and the salary slips pushes a few buttons, and the information system is able to compile that information and provide it pretty much instantly, generate the pay slips. And there's not much of a value addition which is required to be done. And that is why these services are called now as administrative or support services within large organizations. Now, let's go to understanding a bit more in terms of some of the functions and how evaluation is done from a perspective of HR. Now, if I sense a problem within the organization, say for example, I sense that there are a lot of employees who are unhappy within the organization, and what the HR then tends to do with the line manager would be that they would start to probe into why the employees are unhappy, or why there is demotivation in a particular set of employees within the organization. Now, in those cases, what normally starts off as a process is a process of audit. They want to kind of get into from an aspect to see if there is something wrong, in the sense that the process is not working. Is there something which is missing, which has not been provided, and because of which there is demotivation, or there is not enough motivation with the employee to be able to perform its jobs or roles and responsibilities. So what they start off in most cases would be to look at a process of audit. Now, if I have to explain this a bit better, and we look at the purposes of financial audit, a company, if you have a company or a business, you're required by law to produce and say, for example, the annual yearly accounts in terms of the operations of the company. What has the company made in terms of money, profits, how much money is coming, how much money has gone out. And what they tend to do is they expect you by law to produce something called company's accounts. Now those accounts, when they are produced, they can be audited by a register or let's put it this way, audited by a person who's a registered auditor for, say, HMRC or the Her Majesty Revenue and Customs in the UK, so the tax department essentially. Now the reason why they want to look at an audit in this case would be because they want to ensure that the accounts being prepared or which have been prepared and submitted are absolutely factual, accurate, and depict the situation or the profitability or the condition of the company as of that date when the accounts are actually generated. So the process of audit looks at confirming and reconfirming some of these things by looking at the policies and procedures in terms of how these accounts were generated for the company. So similarly, within an HR department, if you have to look at understanding where the problem is, how it is, how the problem started, where it did come from, and what could the problem lead to in terms of, say, productivity, in terms of costs to the company, or in terms of, litigation costs to the company, they always look at it from a point of view of some sort of an audit. And that audit, when it is looked at, when it started, is basically, termed as something called human resources audit. So an example is, going back to what we discussed earlier, BT has made a decision to lay off 30,000 workers, in the organization. Now, why do you think this decision has happened? Why do you think the organization has taken this decision? Where do you think they started on this journey to come to this decision of that we need to lay off 30,000 workers who do not have the right skills or the abilities to be able to take this organization further into the next 10 years? Where do you think it would have started? Any ideas? So if we look at this particular process of why it started, would have been that the HR department would have done a bit of an audit on the skills to see that whether the current set of employees working with the organization have the right skill set to be able to perform their jobs effectively. Now this audit would have, the reason why we call it an audit is because they would have undertaken some sort of a research or a study to identify whether the employees are able to meet or exceed or able to perform the duties which are required to be done on a day in, day out basis. And this started off with as a process of inspection or as a process of, finding out whether this is actually working or not working. And that process basically is called an audit. So they will look at, interviewing a few staff, understanding what they do in terms of the output, and say, for example, if they're in sales, what is the sales they are producing at the end of the month? If you're in production, how many hours they are working? Are the hours being effective and productive? Are they reaching the target in terms of either assembly or manufacturing of the products? And once they come and look at that particular step in that detail, they are doing nothing but in terms of audit, maybe reports, trying to understand why this has a mistake happened or how this mistake would have been avoided. If this mistake had happened, then what has it cost to the company in terms of making that mistake? Is this mistake being repeated? Now, all those things are going to be covered under something called an audit. And here, the idea would be, from an HR perspective, they would like to measure the performance against a certain benchmark, and they would say, okay, in other companies, other competitors, this is what the employee is able to do. In our company, this is what the employee is not able to do. So your performance is falling short by a certain percentage. And this process through which they do this is then becoming something called an audit cycle. Now, if this is done every year, then you will classify this as an audit cycle. Like when we do performance appraisals every year, so what we do is, because they are happening at a fixed time across the year, every year, then in this case, this particular process is then termed as something called an audit process. Now, one of the other tools which HR managers also use would be something called benchmarking. Now, benchmarking, if I have to define benchmarking, what you're looking at doing is primarily at some stage you are, kind of measuring the performance of, say in this case, maybe a performance of, or you're looking at evaluating and comparing two things, how you are doing versus somebody else, or how the performance of employees versus the other employee, and that process through which you do this comparison to see which is doing better, or what is the right thing to do, or is it the right output that you're getting, would be the process of something called benchmarking. So benchmarking as a word, from a dictionary meaning, means you are trying to evaluate by comparison with the standard. That means you have a particular standard which has been set, and what you're trying to do now is trying to evaluate if the others are meeting that standard or not. A simple example in this case would be when you look at, say for example, the sprinter, let's look at a benchmark. So benchmark in this case would be that if I have, say for example, a student completing a task in say 10 minutes, and that is something which is good time as defined by you in the task and the exercise, and if he's able to meet that 10 minutes time frame, then that becomes a benchmark that, okay, technically speaking, a student should be able to do this in 10 minutes because that is what has been measured and looked at as a minimum mark for achieving that. But there are students who are actually achieving it or finishing it in 15 minutes. Some of them are doing it in 8 minutes. Some of them are mostly doing it in 12, 13 minutes. So here, if I have to compare and create a standard, what I'm going to do is I'm going to create a benchmark and say, okay, the benchmark for doing this task or accomplishing this task is 10 minutes. And if you're able to do it in 10 minutes, you're meeting the standards. If you're not able to do it in 10 minutes and take more time, that means there is gap areas which the HR needs to identify. Maybe you're being a slightly bit slow, or you're having difficulty in doing it, and that could be reasons why you're not able to complete it on time. There'll be a few learners who complete it before time also. And they also need to be understood that why, for some of them, they might find the task to be easier. And in this case, the HR might have to look at defining a new task for them, which then is around the 10-minute benchmark. So benchmarking in general as a process is a process wherein the HR would compare your performance and output against a standard which has been set in the organization. So if the CEO of the organization says that, if you have to hire somebody as a sales manager, we need a minimum productivity or a revenue turnover of say 5 million. That means the benchmark that he's setting, beyond which the incentive, compensation, bonus structure will be created, will be the 5 million is minimum you have to achieve. But if you achieve 5.5, you're exceeding that target, and that benchmarking means that you're achieving, say over the target, and your compensation and benefits then will be fixed accordingly. So benchmark is a process consists of things like comparison to competition. You will look at, identifying, sometimes when you do comparison to see what are the areas in which gaps are there, or which areas which need development. You will look at also doing a benchmark because sometimes you want to make improvements, and these could be an example wherein I'm trying to, reach, for example, the train timing. In most cases, when you look at Japan, the benchmarks are set that the trains do not leave or arrive late as per the timetable which has been set. But if there are some slippages and certain trains are arriving late and not on time, then they will look at doing the process of something called identifying improvements, that where all it is taking time, wherein they need to kind of shave off that time for them to reach the station on time. And sometimes these are done because you have to identify the benchmarks that, okay, this is what is the ideal, but if they are not able to achieve it, then how do we look at comparing them and then making improvements? Now, sometimes you will see benchmarking also means certification, and that would mean, more value for the customer. So if you do training within an organization, you go and attend a training seminar, sometimes you will see that some training providers give you what is called the Cpd certificate. They basically give you that, okay, you've done the training, and that training is worth 2 hours of Cpd that you were required to be doing to maintain your professional status, say as a professor, as a lecturer, whatever. So sometimes you will see that the benchmarking is also done so that certification can be achieved. ISO standard, for example, the International Standards Organization, which has a lot of standards it maintains specifically for production and engineering, you can achieve as a benchmark and say that I have that quality of certification. And if you have ISO 9000 in your organization, then you clearly are doing things which are set by the international standards to be able to follow. Things like version number of documents. So you have a policy, you have a version of that policy, and every year that policy is revised. What you do is you change the version on that, that the document is quality controlled. And because you have quality control within the organization, you're following a bit of a benchmark which meets the ISO standards. So benchmarking is also done from a point of view of gaining reputation or certification, and that would be important for HR to look at, because when they set benchmarks of, okay, he's a star performer in the organization. Why they've set him as a benchmark? Because he's not just achieving it, but he's also qualitatively maybe helping the organization in other ways apart from just achieving the target. And that process sometimes is what you will look at is something called benchmarking. Now, one of the most important tools which organizations look at for measuring performance, and this is to look at measuring performance from a point of view of employee performance, they use something called a Balance Scorecard. And Balance Scorecard is one of the key tools that HR managers need to know about, when you work within, within the human resources department. Now, the Balance Scorecard as a tool was invented, by a few scientists in the early 1960s and 70s. Before that, most of the measurement of the organization in terms of, the employee, in terms of their achievement, was done primarily by setting the objectives, which were done by the management. So could you, every day, every month, or every quarter, the objectives were set by the management, and the workers, kind of looked at achieving those objectives. And the clear idea there was that the people were being managed within the organization by setting objectives, and these objectives were essentially set by the management within the organization. Now, that is where the term, obviously, management by objective, or MBO, came about. But in the late 90s, a lot of organizations started to look at a different model of, performance evaluation within the organization. And Peter Drucker, who's one of the, people who did a lot of research in understanding how performance and performance appraisals need to be done within the organization, why the employees need to be rewarded in order to motivate them and keep them loyal to the organization. This method of, something called the Balance Scorecard was then developed by Robert Kaplan and David Norton in the 1990s. And when this method came out, this method basically talked about incorporating, the process of doing reviews for an individual within the organizations by looking at, all the parameters which affect the performance of the individual. So these parameters could have been things like which are financial. These could be the internal processes of the organization or a business, how they deal with customers, and in terms of training and development or learning and growth happening for that individual, and the basic things being provided in terms of training and development by the organization. So what they meant essentially was that if you have to evaluate the performance of an employee, the performance of the employee has a direct correlation to, everything which is happening within the organization, whether it's financial, whether it's, policies or procedures, whether it's to do with the customers or the things that they face outward in the organization. And last but not the least, they talked about some of the areas which primarily are related to, how the organization sees the employee as a resource within the organization. Do they see the employees growing and evolving within the organization as the organization grows? So here they talked about, training and development by looking at the root of learning and growth happening? Is the role in which the employee working, is it increasing the skills? Is it keeping it? Is the role quite, let me use the word, is the role quite interesting enough for the employee to be able to perform within that role? And that was also looked at in the overall evaluation of the performance of the employee within the organization. So this particular technique, which basically evolved in the 1990s, is now become a standard tool which the organizations sometimes use to evaluate the performance of an individual within the organization. Now, a simple example that I will give you here is, sometimes you will see that when you meet people, they say, okay, I'm trying my level best, but I don't seem to be getting anywhere. And the reason why they're not able to get anywhere would be that the HR needs to go in and say, okay, you come on time, you're loyal to the company, you've been working for 5 years, you're trying your best, we can see the documentation, the efforts that you're putting in, but you're somehow not able to hit your targets. Now, if they have to do a full introspection into why the person is not being able to perform, even though the person is doing the right things as prescribed by the employee handbook, the contract, the roles and responsibilities, what they will then need to do is they will need to do an audit to see what are the things or issues or areas or problematic areas which are hampering the individual's performance in terms of him or her achieving the objectives. Now, it starts off with the audit process, and the audit process then identifies certain gap areas or areas which are in which there is not proper supervision being given, or those areas wherein because of the gap the employee is not able to perform. Now, in order to go a step deeper, what they will have to look at is they will have to look at the other things which also affect the performance. It could be internal, external factors. It could be the manager which is in the organization working under which the person works, and in some cases they have to look at the processes or the internal processes of the organization. Are they conducive? Are they effective enough to help the person do their role quite diligently on a day-to-day basis within the organization? So here, in order to get into the depth of understanding which areas are causing a problem or where the problem lies, the company, the HR department in the company would then end up using something called a Balance Scorecard. So they will evaluate all the factors which affect the performance of the employee within the organization, and that model that they're going to use will be the Balance Scorecard, because it takes into account the finances, the training and development, the internal processes, and also the job description, the goals and objectives which have been set for the employee to be able to achieve that performance. So, as you will see, that these tools are quite important for us to understand, because as an HR manager, we will use this to break the individual issues down and identify that clearly to where the objectives are, what measures were taken, who who's being affected by these measures, and is the employee taking initiatives within those measures or the roles which have been given to achieve that goal. And that is where you will use this technique called the Balance Scorecard, because it breaks it down into 4 key areas, which are areas like objectives, how to achieve these objectives, and then what are the activities which are being done to achieve these objectives. And this is a very clinical way of understanding the performance of an employee within the organization, and that is where this concept of Balance Scorecard and the HR audit actually comes in. Is that okay? Any questions on this so far? Any questions on this? Any questions, Wellington?
No.
So what I'm going to do is, with this, what we will do is, I'm going to kind of stop here in a second or so, and I will also then basically look at giving you 2 handouts in particular. One would be a handout on what are the key tools which are used by HR managers to evaluate the performance of employees or staff within the organization. And here we are going to focus on 2 and 3 in particular. One will be the HR audit. second will be benchmarking, and the third would be a balance scorecard. And I'll give you a particular handout on these so that you can go through them in a bit more detail and use the application of it using the handout to apply it to a particular situation and see if you can understand this in a bit more detail. The other thing would be to look at what we've covered so far is the functions of HR and going into depth to differentiate that into the Ulrich's three-legged stage 2 stool, and those being the shared services, the business partners, and the expertise in terms of understanding how the services can be broken down for delivery and better achievement of goals and objectives within the organization. And then last but not the least, what we want to be able to do is understand the contribution of some of these functions which the HR does to the organization. And this is where we're going to talk about things like, sometimes you heard about things like, we talk about, we talk about certain things which are how you differentiate performance of one employee from the other. How do you make sure that somebody who's achieving more or is helping to achieve more in terms of the objectives of the organization is rewarded more, so that there's a bit of a differentiation, in the motivation levels and the compensation to a certain extent within employees. So here is what we look at, certain techniques like compensation, pay benefits. We look at softer benefits which the organizations provide. Things like, you might have an access to a company car, you might have access to the company paying your mobile phone bill. And those are things being done primarily because depending on where you work within the organization. So if you are a frontline manager, you might have certain pay and benefits and perks which are commensurate with that role to help you perform your duties on a day-to-day basis much better. But if you are at a senior manager and you're looking at the option of reviewing but also doing some of the activities directly, you might have some additional pay and benefits and perks which basically help you, perform and also kind of give you the motivation to show more competitiveness because your role is slightly higher and much more important in the organization as compared to the role of the frontline managers. So here, things like when we look at recognition certificates that employees get in terms of you work 3 years within the organization, 5 years within the organization, you get a certificate of recognition. Sometimes you will see some companies differentiate by saying you've given us 10 years of service, so they give you a watch on the 10 years of service, 20 years of service, and 25 years of service. So some of these things are done primarily to differentiate the performance of the individuals within the organization. And the appreciation sometimes the organization has to show in order to create that differentiation. So here, that is what is meant when we look at how sometimes you will see that the role of HR would create that differentiation and those practices in terms of rewards, incentives, pay package, perks, bonuses. Something that you must have heard of called Employee Stock Option Plan, ESOP. Sometimes you will see senior management in the company gets stock options. That means they can get company shares for free. They can divest them after 1 year, 2 years, 3 years, subject to the company and they're hitting those benchmarks. So like in the case of Tesla, if you look at Elon Musk, what he's done is he's come up with a 10-year plan where he says, I will draw me only $1 as a salary, but if I'm to put this plan in place, his annual bill in terms of the salary that he will draw from the company over a 10-year period would be $1 billion. So what he's proposed as a plan is that if the company hits certain targets in terms of numbers, volumes, the share price hits a certain target, profitability target, then the company is looking at giving him increased emolument or increased pay benefits, and that is how he set that package. So those are things which sometimes you will get to see as people getting in the organization who are high performers or people who are able to deliver, take more risk and deliver much more than what is expected. And in those cases, the HR department or the HR has to put in place things which then allow them to differentiate, the performance of one individual from the other, because the other individual is looking at delivering, much more than what is expected, and that is where the compensation and the benefits have to be in line with what the risks are, and that will keep employees much more motivated and loyal to the organization, because there those developments have a significant impact in terms of the future of the business, or in terms of the direction of the organization. Is that okay? Now, any questions on what we've discussed so far? Any questions at your end? So that's good. If everybody is, everything is understood, then I'm more than happy that everything has been understood. So let me stop here for today's session, and I'm going to send you, obviously a copy of this presentation is available, but I'm going to send you the 2 additional handouts, which I would suggest that you need to read in order to kind of, develop a bit more understanding of what we've discussed in Learning Outcome 2. Okay?
Yes, sir.
Okay, Wellington. That's good. Now, one last quick thing, which I want to, one second.